Welcome to the presentation from Group 5 of the course Advanced Taxation 1. My name is Sun Pujun. Our topic today is going to talk about the budget 2023. And the impact on individuals or businesses will be discussed through the relevant tax regulations.
Hi, I am Dan Jing Hong. Now I want to talk about the title of our assignment. The title of our assignment is the Tax Implication of Malaysia Financial Budget 2023 on Business and Personal Income Taxation. Budget 2023 is themed Developing Malaysia Madani, which involves all allocation of 388.1 billion with 289.1 billion for operating expenditure. 99 billion for developing expenditure, including 2 billion in contingency saving. This is the first budget presented under the Anwar United Government. Budget 2023 was originally presented by the previous government in October last year, but was not approved after Parliament was dissolved. Content for the assignment is government continues to provide various loan on financial facility for MSME enterprise and imposition of excess profit tax or prosperity tax or super profile tax and removal of tax expenditure on foreign source income, what we call is FSI, and adjustment to tax deduction for qualified donation and adjustment of personal income tax. Now I will present my part for the assignment. The point that I choose for the assignment is government continue to provide various loan and financial facility for the MSME. This help to access the capital. The availability of financial facility provide MSME entrepreneurs with access to capitality that they may not have otherwise. This can help them to start, grow, or expand their business and help them to create job creation. MSME are major contributor to employment generator in many countries. By providing financial support, the government can help those businesses create more jobs and contribute to economic growth and encouraging entrepreneurship. By providing financial facility, the government can encourage more people to become entrepreneurs, as they may feel that there is support available to help them start their business. Anwar Unity Government proposed to reduce taxation on MSME first 150,000 ringgit income to 50% from 70% previously, which he added will enable 150,000 MSME taxpayer to each save up to 3,000 ringgit. Government will provide the 2% tax reduction was only application to MSME first 100,000 ringgit in income. Provision of 40 billion in financing facility to MSME towards supporting the adoption of business automation and digitalization activity. I must say the government has allocated 100 million ringgit under the SME Giant scheme. I must say there is 1 billion ringgit facility under Bank Negara Malaysia aimed at incentivizing SMEs to automate process and digitalize operation. AMA continued that Bank Simpanan Nasional, PNM, and National Entrepreneurs Group Economy Fund will also provide another 1.7 billion ringgit in loan facility to help micro entrepreneurs, women, and youth.
Greetings to Ms. Afiza. My name is Bhavani Loganathan. I would like to present about tax implication on business, which reduce income tax rate for MSMEs. First of all, a reduced income tax rate of 70% is current by given to an MSME for its first 600,000 of chargeable income. Secondly, to qualify for this reduced rate, the MSME is required to observe shareholding or capital contribution condition. Next, the amongst the current key area which disqualifies an MSME from enjoying the reduced tax rate is when another related company in its group more than 50% shareholding, which is direct or indirect relationship as a paid up capital in respect of ordinate share of more than 2.5 million. Lastly, standard corporate tax is 24%. Propose of effective from year 2023. First of all, chargeable income for first 150,000 ringgit Malaysia, which calculate as 15 percentage income tax rate. Secondly, 150,001 to 600,000 ringgit Malaysia is calculated as 70 percentage income tax rate. Lastly, exceeding 600,000 ringgit Malaysia, which calculated as 24% income tax rate. Furthermore, tax implication on business for transfer of real property to forget spouse. Firstly, disposal price for a real property is deemed to be equal to his or her acquisition price is available for transfer of real property between spouse where the transfer or is Malaysian citizen. Secondly, no gain, no loss treatment is not extended to transfer between former spouses in such cases. The transferor would be subject to the pre-selling RPGT rates as follows. RPG rate for disposal within 3 years after acquisition is 30%, and in the fourth year after acquisition is 20%. Next, in the fifth year after acquisition of disposal, RPG rate is 15%, and thus lastly, in the sixth year after acquisition of thereafter, RPG rate is nil. So we can conclude no gain, no loss treatment be extended to a transfer of real property between former spouses, which is carried out pursuant to an order of any court in consequence of the dissolution on or annulment of their marriage where the transfer is a Malaysian citizen. Thank you.
My name is Sun Pujun. Now I'm going to talk about the tax implication for individuals. The first point I'm going to mention is the tax deduction for qualified donations. Budget 2023 proposes individuals or companies donating to nonprofit undertaking grassroots sport development programs will qualify for a tax deduction of up to 10% on aggregate income. Here are some requirements for this tax deduction. First, it must be a monetary or in-kind donation to any accredited grassroots sports activity or group. Second, for individuals, qualified contributions are eligible for a 10% personal income tax deduction. It is worth mentioning that neither the Budget 2023 nor the LHDM specifies a minimum contribution, but recipient organizations may have their own rules. For example, the World Wildlife Fund requires a minimum donation of 10 ringgit. Finally, the information required to request a tax-exempt receipt from an authorized authority is a donor's name, ID number or passport number, and complete mailing address. Here an example of calculating taxable income. Muhammad's taxable income is 55,000 ringgit and he has donated 2,500 ringgit to approved grassroots sports related nonprofit organizations. Muhammad can deduct 10% of his gross income to reduce his taxable income. Therefore, his taxable income should be 54,750 ringgit. Now I'm going to talk about the impact of this tax deduction. Nowadays, a country's level of development is not only reflected in its economy performance, education, healthcare, and political stability are all very important, especially the level of sport in a country. It can influence its reputation and soft power in the international arena and contribute to social, cultural, and economic benefit. First, tax breaks incentivize individuals and corporations to donate to nonprofits that run grassroots sport development programs, which could lead to increased funding for those programs. It also leads to better infrastructure and good facilities. Second, growing grassroots sports can provide opportunities for young athletes to develop their skills. This creates a pool of talent for the country. And with more funding, nonprofit can provide more opportunities for individuals, especially those from disadvantaged backgrounds. Third, grassroots sport development projects can have a positive impact on public health by promoting physical activities and healthy lifestyles. In particular, it can help reduce teenage rebelling and lead healthy, disciplined lives. Fourth, Sport can help bring people together, and developing grassroots sports can increase social cohesion, build a sense of community, and reduce social segregation. Fifth, sports development programs can also have economic benefits by creating jobs and generating revenue for local communities. Finally, any major international sport event, such as the Olympic Games or the World Cup, can promote the integration of the world culture, which increase the public sense of belonging to a larger global community.
Following Pudri's demonstrations of the first tax effects on individuals, I will continue to present the second tax effects in the same context. Greetings to Ms. Afiza. My name is Christy Cha. I would like to demonstrate adjustment of personal income tax rates. In the latest financial budgets announced in the previous month, the government has proposed a new individual income tax rate structures in response to the high cost of living and to increase the disposable income of middle-income people. The budget 2023 proposed to reduce the residents' personal income tax rates by 2 percentage points for each of the taxable income range between 35,000 ringgit and 100,000 ringgit. While on the other hand, the government is proposing to increase the income tax rates for domestic persons with taxable income earnings more than 100,000 ringgit to 1 million will be raised by zero point 0.5 to 2 percentage points. In the next slides, as can be seen from the table beside, the tax rates for incomes between 35,000 and 100,000 has been reduced by 2 percentage points, while the tax rates for incomes who above 100,000 has been adjusted to increase by 1 percentage point. Subsequently, the income tax savings and benefits for individuals due to the change in tax rates can be shown in the following diagram. The chart shows that individuals in the middle class family category can avoid paying an additional of 1,300 in taxes. In contrast, individuals with higher income would have to pay more tax to the government. After the partition of the pandemic, every individual and businesses are inevitably being affected in all aspects. The most evident part is the impact on the market economics and financial capabilities of humans. As a result, the government is dealing with the sabotage it has suffered in the aftermath of the pandemic. The government plans to lower the tax to alleviate the hardships faced by the people. One of the implications of most evidence for individual is that it increased disposable income for a majority of middle-low income earners. Lower personal tax rates mean individuals will have more money to spend or invest as they see fit, increase the purchasing powers. This can help boost economic growth by increasing consumer spending, which in turn can create more jobs and expand businesses. Additionally, it may encourage works and productivity since people retain more of their money. Last but not least, it can encourage tax compliance as individuals may be more willing to pay tax if the tax rate is reasonable and they believe the tax system is fair. Lowering personal tax rates is beneficial to both taxpayer and the economy, but it is crucial to make sure that any reductions are viable and won't result in significant budget shortfalls or other economic issues. Therefore, to increase the progressiveness of the income tax system, the tax percentage on greater income is being raised by the administrations. This balances the overall economy. Taxpayers with excess funds and spending power will be responsible for paying more taxes than average people to make up for the poor consumption power of the middle class. These structures will drive individual decisions to save and invest less. Higher tax rates can negatively affect an individual's ability to save or invest in their business or retirement. Likewise, it may reduce motivations to work for individuals. Some people may choose to work less because of higher tax rates and they may feel that their efforts are not worth paying higher taxes. Additionally, it increases the possibility of tax evasions. Higher tax rates may encourage individuals to evade taxes, which will have an adverse impact on overall economy. Also, higher tax rates can lead to a shift in consumer behavior toward lower priced products, which could have an detrimental effect on the economy. Especially for luxury goods and services, higher earners will need to provide a larger proportions of tax revenue to the government. The suggested measures comprise both new ones and those from the previous 2023 budget, reflecting the government's bold and forward-thinking strategies for fostering an inclusive society, accelerating economic recovery, and ensuring that no one is left behind. The 2023 budget can be considered a comprehensive plan that accounts for the expansions of the national economy. To lessen the load on the general populace, the government is stepping up efforts to combat destitutions in addition to reviving the economy. To illustrate the government's continued commitment to support MSME amid financial challenges and rising costs. The measures include reducing the income tax rates from 70% to 50% on the first 150,000 of chargeable income and providing assistance in the form of various loan facilities and guarantees. These measures promote innovations and aim to prepare MSME for the futures. In contrast, the government has also proposed introducing taxes such as luxury tax, a capital gain tax, and raising tax rates for higher income earners to boost the revenue. In summaries, it appears that the policies are unified, thorough, and inclusive, setting the foundations for a more viable futures. Thank you all, and that concludes our presentations.